Good morning. Welcome to Stock Market Today. It's Thursday, October 17th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were mostly lower in Wednesday's trading with a continued focus on 3Q earnings. Energy and technology were the biggest drags at the sector level. Treasuries were mostly stronger with the curve steepening. The dollar was weaker versus the yen and the euro. Gold finished up 70 basis points, and WTI crude added 1% on the day. As we get to the desk this morning, futures are pointing to a higher open, up about 30 basis points. Some Brexit news and earnings and trade getting the bulk of the attention this morning. European markets are seeing moderate gains. Asian markets were mixed overnight. Treasuries are under pressure across the curve. The dollar's flat on the yen, lagging the euro. Gold down 10 basis points, and WTI crude giving a little bit back, down 0.5% to get things going here today. For the S&P 500, there's that line in the sand on the upside at 3,000, and we faded from that resistance mark at the 3,000 level. It does remain in place, psychologically important, and we failed from there a couple of times, keeping us in this well-defined range that's been in place since July. Support, the key support levels that I'm watching, 200-day moving average, now up to 2860. And then as I've been saying, the August lows near 2820. RSI is holding bullish ranges for now above the 50 mark, but Chaikin money flow does remain on a bearish reading. So a little bit of a mixed signals here from the indicators as the index fades from resistance. Now, I will note futures have us trading back up near that 3,000 mark here this morning, and we'll see how that plays out as the day goes on. For now, we are still in the consolidation, but as I've been saying, I think the weight of the evidence supports an upside resolution into the end of the year. So what are we talking about in my note today? To Chaikin Analytics clients, we hit on the first bullet point already. SPY, the S&P 500 ETF fades from resistance near the 300 level. Bank stocks trade well after earnings, leading to outperformance. The software stocks continue to weaken, and breadth metrics improved as the market moved higher. Futures do point to a higher open here today, as I said. Taking a look at the major markets now from a power bar perspective, the Dow, let's call it flat on the day. 4 bullish stocks for 7 bearish stocks in that index. S&P 500 down 14 basis points, 110 bulls to 97 bears. The NASDAQ, slight underperformer, but still 23 to 17 bulls to bears. Small caps are actually uptick on the day. So an outperformer with 572 bullish or very bullish stocks in that index for 369 bearish or very bearish stocks. Bonds ticked slightly higher, but as we said, they're giving some back here today. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish, but the major markets across the board are mixed. Taking a look at our stock of the day now. This is one that longtime readers of my work and followers of what I've been saying should recognize. Northrop Grumman, NOC, the ticker symbol there. Closed at 364, spot 69 yesterday, up 76 basis points on the day. Northrop has a very bullish Chaikin Power Gauge rating due to very strong earnings performance, very strong price volume activity, and very positive expert activity. Financial metrics are poor, but when we take the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating. Stock has a strong trend above the trend line and is in a strong industry group. Space and defense has been one of the areas of the market that we have liked. Now, taking a look, reading the chart from the bottom up, that very bullish rating is met with an outperforming stock that is now oversold based on our indicator. Really, the only knock on this chart is money flow dipping into negative territory here as the stock has pulled back. And if I pull up the checklist, you can quickly see 5 out of the 6 categories that we look at are green. So the weight of the evidence does support a continued bullish stance on Northrop. It's a name that we have liked. It's a name that we continue to like, and I actually think it looks somewhat compelling on alongside of the portfolio here and now. So for those of you looking for exposure to a leading stock and a leading industry group, Northrop Grumman is as good a place as any to get the ball rolling on that type of analysis. Turning to our sector tracker, movement of the major sectors over the last 5 days. Financials remain at the top of the list. on the heels of some positive responses to bank earnings. And this is probably one of the areas that I'm watching most closely. Financials fundamentals have been strong for a while, but the market model have not been into agreement. I've been saying potentially that earnings could be a catalyst. We'll see if that continues to play out. Comms, industrials, and materials round out the top four, with industrials and materials being trade sensitive. Discretionary, healthcare, tech, and energy are middle of the road, and our bond proxy / defensive areas of the market or towards the bottom of the list now, as interest rates have potentially started to bottom. That's another key theme that we are watching closely. We've been long-term advocates for further declines in interest rates, but we're now starting to see some signs of a potential bottoming in the near term. We're watching that closely, especially for the impact that it could have on certain areas of the equity markets, namely financials, utilities, and REITs. Our industry in focus today, insurance services, and this has been another group that where we have been positive for a while. The insurance stocks have been outperformers. The group outperforming the S&P 500 by 3% over the past 6 months. And its power bar ratio, which measures future potential, is very strong. There are 19 bullish or very bullish stocks in this fund for only two bearish or very bearish stocks. Earns it a rank of number 3 of the 21 subsectors that we look at. And some of the indicative names there that you might want to consider after further analysis: Athene Holdings, ATH, very bullish rating; the Hartford Group, HIG, with a very bullish rating; and Allstate Corporation. You're in good hands. ALL has a very bullish Chaikin Power Gauge rating. And if we look at the ETF that tracks this insurance industry group, the ticker symbol there is KIE. We can see that it does have a very bullish ETF power gauge rating. Now, the trend is weak because it's below the declining or below the long-term trend line, but just barely so. Fund continues to be an outperformer relative to the market's been outperforming since late April, early May. Throughout that time frame, Chaikin money flow has been persistently bullish, right, with more intense bullish ratings than bearish ratings, on a slight bearish rating now. But to me, the weight of the evidence supports continued outperformance by the insurance stocks. Power gauge rating, very bullish. Power bar ratio at 19-2. I think you want to consider names within this group. You can drill down on the holdings. There are 19 bullish or very bullish names that you can do further work on to look for some of the opportunities. Again, leading stocks in leading industry groups are where you want to focus for your bullish ideas. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, the gainers and losers in the markets. McKesson, as well as ABC, the number 3 name on the list. Both of those names are higher. McKesson by 4.8%, ABC by 3.4% on news of a settlement around some opioid cases. So that alleviated a near-term overhang and some uncertainty around those stocks, which led to a bit of a relief rally. JB Hunt, JBHT, reported earnings that sent that stock higher by 3.6%. But I think it was their commentary. They had some positive comments around the fourth quarter, which really led to the stock outperforming on the day. CPRI is a bullish stock that added 2.6% yesterday. Didn't see any company-specific news on that name to drive the outperformance. And Pulte Homes, along with the rest of the home builders, check out the home builders yesterday. Whether you look at the funds, XHB, or the other funds that are levered to home builders, breaking out to 52-week highs on the back of some sentiment surveys around the builders. Highest level home builder sentiment since February 2018. That helped a name like Pulte Homes add nearly 2.5% yesterday. But if you drill down on the group, a lot of strength across the board. Check out XHB, traded at a 52-week high yesterday. On the loser side of the board, Alexion, ALXN, down 5% as they announced that they are buying Achillion. Investors obviously didn't like what they heard there, or maybe they don't like the transaction. Stock lower by about 5%. EXC, on the loser side of the board, again, similar to yesterday, down 4.5%. Nothing company specific there. DXC, nothing company specific to drive that stock lower by nearly 4%. Salesforce.com and Autodesk down 3.78% and 3.08% respectively, as software names, especially the high valuation software names, were under pressure yesterday. We're going to take a look at a software chart a little bit later in the show, actually coming up in just a couple of moments here. But first, on Thursdays, we look at market breadth, right? We take a holistic view of the market. And every day I write about different themes to kind of support one view or the other based on what we're seeing in the marketplace, right? So yesterday was sentiment. We talked about sentiment has still skewed to the bearish side of the coin, and positioning was also skewed bearishly. That could argue for potential upside from a contrarian point of view. On Thursdays, we look at breadth, right? We want to get a sense of names underneath the surface in the S&P 500 and how they are performing. So here in the top panel, we're looking at the percentage of those stocks that are above their respective 200-day moving averages, and that metric stands at 66%. Readings greater than 60% are a sign that a healthy majority of stocks in the index are in long-term uptrends. And for us, the line in the sand is 50%. When we break below 50%, the market tends to struggle, similar to what happened in the fourth quarter of last year. But so far throughout 2019, we've been able to hold above 50%, and now we're back above the 60% mark. So healthy majority of stocks in the index in long-term uptrends. We want to take that analysis a step further and look on a shorter term time frame. We can look at the percentage of stocks that are above their 50-day moving average. The line in the sand on this one is 30%. You can see what happens when we break below 30%, as we did last fall, leads to a decline in the market. So far, we've been holding above that 30% mark for the most part in 2019, and we are now above the 60% level. So now a healthy majority of stocks are in long-term uptrends. A healthy majority of stocks are in intermediate term uptrends, and the S&P 500 here is holding above that key support level at the August lows. So sentiment is bearish, argues for a tailwind to the market, while breadth is supportive of continued market strength. So when we take these data points and roll them together, we come out with the view that odds favor an upside resolution to this consolidation in the S&P 500 that's been in place since roughly the July timeframe. Sentiment and breadth confirming what we're seeing in price. Now, one of the areas of the market that I said I'm watching closely here are the banks, right? Financials have been underperforming the market, and that's largely due to banks, right? The insurance area of financials, which we looked at earlier, have been strong. That has been the place to be within the financial sector, right? But banks have been underperforming, and that's been a drag on the broader sector, right? So being in the right areas of a particular sector become really important. However, we're starting to see some personality change within the banks on the heels of the earnings. The earnings have been in focus this week. So far, the big banks that have reported, their earnings reports have been well received. So we're taking a look at the KBE here, this Spider S&P Bank ETF, which has now regained the 200-day moving average. And for the first time in a while, that 200-day moving average is moving higher, right? So potential shift here in the trend. At the same time, the RSI, so our measure of momentum, has put in a series of higher lows, indicating that the momentum to the downside may be shifting, right? Maybe less bearish could lead to some improvement. And if we look at KBE relative to SPY, you could see a clear downtrend since the May-June timeframe of last year, but we've now broken above that downtrend line and are continuing to work higher. It is early days. The fundamentals around the banks have been strong. If you look within Chaikin Analytics, KBE, right, more bullish stocks in that fund than bearish stocks. We've been waiting for the market model to get an agreement. We've been watching earnings as a potential catalyst here, and we're going to continue to do so because it does appear that we are early stages of a personality change for the banks. But an area of the market that's also showing a personality change just in the opposite direction is software. XSW testing a rising 200-day moving average on an absolute basis, but momentum is waning. And on a relative basis, we have broken below support. And at the same time, the fund has a bearish ETF rating. That's going to wrap it up for today. Have a great day, everyone. I will be back here tomorrow.